If you are a business owner in Ghana and you have ever taken or plan to take a bank loan, this information could save your business thousands of cedis. The Bank of Ghana's latest SME lending data revealed a shocking difference in cost of business loans across banks. Some Ghanaian SMEs are paying interest rates as high as 33.58%, while others are accessing similar loans at around 11.03%. That means two entrepreneurs can borrow the same amount of money, work equally hard, and yet one could lose far more of their profits simply because they chose a more expensive loan. And the scary part is that many business owners focus only on getting approved for a loan, but they rarely ask the important questions. How much is the money actually costing my business? Today, we break down Ghana's SME loans rates, why some businesses pay more than others, and how you can avoid taking a loan that quietly destroys your profits. According to the latest Bank of Ghana Annualized Percentage Rates report for May 2026, the cost of borrowing money for small and medium-sized businesses is very different depending on the bank you choose. And the biggest surprise, some SMEs are paying more than 3 times what other businesses are paying for bank loans. This matters because for many entrepreneurs, borrowing money is necessary. You need capital to buy stock, purchase equipment, open new branches, hire workers, increase production, but the wrong loan can turn business growth into a financial burden. I want to go ahead and explain the numbers to you. Let's look at the numbers. 1 year SME loans. GT Bank Ghana recorded the highest lending rate at 33.58%. Standard Chartered Bank Ghana recorded the lowest at 11.03%. That means the difference between the most expensive and the cheapest option is over 22 percentage points. Imagine borrowing 100,000 Ghana cedis. At a high interest rate, a business could lose thousands more in financial costs compared to another business that negotiated a cheaper facility. This is why entrepreneurs should stop asking only how much money can the bank give me. A better question is, how much will this money actually cost my business? Knowing this, I want to go ahead and explain to you why some SME loans are expensive. Many business owners just ask, why do banks charge small business so much? The answer is risk. Banks look at small businesses different from large companies. A large company usually has audited accounts, predictable income, years of financial record, valuable assets, but many small businesses struggle with incomplete records, mixing personal and business money, unstable cash flow, no proper financial statement. From the bank's point of view, lending to an SME carries more uncertainty, so they add what is called risk premium. In simple language, the higher the risk the bank believes it is taking, the more expensive the loan becomes. But I won't just end here. I want to go ahead and also explain to you why some big companies get cheaper loans. Here is something many entrepreneurs don't know. Large companies often borrow money cheaper than small businesses. According to the same report, some corporate borrowers access loans below 10% for longer facilities. Why? Because banks see established companies as safer. They have stronger records, bigger assets, consistent revenue, a better repayment history. This creates a difficult situation where the businesses that need money most often pay the highest price for it. So this is a simple theory. Small businesses pay higher interest rates simply because they have no proper records, they don't have any history of paying their credit. Probably this is even their first loan. But big corporations have bigger machines to auction off, they have bigger collaterals, they have even buildings they can sell off to pay their loans in case they can't afford it anymore. This is a simple theory. Now, if you're small businesses, you might be wondering, how can I get a cheaper loan? And you ask yourself, what can an entrepreneur do? Number 1, keep proper business records. Small businesses lose access to cheaper loans because they cannot prove how much they make. Because of this, if you want to get a cheaper loan, here are some things you need to track. You need to track your sales, your expenses, your profits, your cash flow. A bank cannot trust what it cannot verify. If you don't keep proper records, no bank is going to know how much you actually make in a day. But if you are depositing and you have a bank account and you have better records, you can actually prove that you deposit so amount of money, and that could help you get a cheaper loan. Number 2, separate personal money from business money. One common mistake: business money enters your personal account, then nobody knows if the business is actually profitable. Because of this, open a business account and build a financial history. When you don't even have proper records, but yet you have a deposit history that is laudable, banks could consider that and give you a proper loan and even make it more cheaper for you. Number 3, compare different banks. Never accept the first loan offer. Different banks have different pricing. The difference between 33% and 11% is massive. So always compare. Don't just get up and say, I'm going for a loan. Go to your bank of choice and seek a loan. No. Compare different banks. Different banks might give you different rates, and then you get to choose what is best for you. Number 4, understand APR, not just interest rates. Some entrepreneurs here will offer loans at 20% and stop there. But the annualized percentage rate includes the true cost of borrowing, including additional charges. When you go to take a loan, there are other charges like insurance, additional charges. The bank itself might charge you an extra if they believe you are too risky. Know all of these things. Ask, what is the APR? Number 5, build your business credibility. The stronger your business looks financially, the better your negotiation power. Banks reward businesses that demonstrate discipline, stability, and transparency. So fellas, this is simple. Run your business with integrity. Don't make sure you don't mix anything illegal in it. Make sure you don't evade taxes. Make sure you pay your taxes. Make sure you collect your VAT and pay the VAT. Don't do any kululu, because if you do kululu, you see shege. If you do anyhow, you will see anyhow. Run your business with credibility and integrity, and this could help you lower your interest rates. If you're a small business owner, the lesson I've been trying to teach you all throughout this video is simple. Money is not just about getting access to capital. It's about getting capital at a price your business can survive. A bad loan can trap your business. A smart loan can accelerate growth. The entrepreneurs who understand finance will always have an advantage. This is why you need to follow Money Code Africa, because in business, the cost of money matters just as much as the amount of money you are receiving. What has been your experience with business loans in Ghana? Have you ever received a loan offer that felt too expensive? Share your experience in the comments. Your story could help another entrepreneur make a better decision. And if you want more simple explanation about money, business, and wealth creation in Africa, subscribe to Money Code Africa. Follow us on all your social media handles. Money Code Africa. I'll see you in the next video.